This is the Human Action Podcast with your host, Dr. Bob Murphy.
Welcome, everyone, to another episode of the Human Action Podcast. This week, I am hosting solo. Whenever there's nuclear tension in the world, the president of the Mises Institute, he's scrambled in the jet known as Rothbard 1, and so that's why he can't be with. No, of course not. Jeff has things going on right now. I'm hosting this week, and I'm glad to have our friend Toby Baxendale from the UK. Toby, thanks for being able to join us.
It's a great pleasure, Bob. Thank you for inviting me on.
Now, we know of you as the entrepreneur and founder of the Cobden Centre, but can you just give people who aren't familiar with you just a little bit of background on your general bio?
Well, I think you've done fair justice there. I mean, I created the largest fresh fish and meat wholesaler in the United Kingdom, servicing the food service sector from university, from nothing, and I sold it 12 years ago. That's my entrepreneurial sort of claim to fame. The connection with the Austrian school, just for listeners, is I was inspired by Margaret Thatcher in the mid 80s, really. And I hosted, as a young conservative, an event at the Polish Institute in Hammersmith. And this was, of course, before the fall of the Berlin Wall. And an old Polish war veteran came up to me and said, I must introduce you to this fabulous author, Friedrich Hayek. So when I was 16, I had a copy of Eamon Butler's introduction to Friedrich Hayek. And then I said to my mother, Mum, I'm going to the LSE. I want to study Austrian economics. Then aged 18, I end up at the London School of Economics in the economics faculty. And of course, when I'm inquiring about this amazing individual, Hayek, who I've now read an introduction about, they divert me over to the politics department. Then you sort of inquire about his economics, and everyone sort of scratches their heads and no one really knows. And bear in mind, this was in 1988, and he left in 1951, and he did win a Nobel Prize for the work that he did the 21 odd years at the LSE. And anyway, cut long story short, I got to the bottom of it. Road to Serfdom and Beyond was the only thing that the people at the LSE were then interested in the politics department, and the economics had completely bypassed and forgotten anything to do with Hayek. And then when I left, and like all, I'm sure, the university you've gone to, they hit you with requests for money after you've left. After a few years, will you come back and support us and this, that, and the other? And I said, I'd love to support any teachings of Austrian School Economics. And then the lady, in the fundraising department, I mean, in fairness to her, she wasn't an economist, but she was married to an economist. She wrote back in German to me saying, I'm delighted you're interested in Austrian economics and the country and this, that, and the other. Yeah. And then I went to speak to her, and it became clear that she was thinking I was some kind of obsessive about the nation of Austria.
Yeah, unemployment rates of Vienna in the 20th century, yeah.
And then I had to explain. And anyway, Tim Besley, certainly now Sir Tim Besley, an economist there. I wouldn't class him as an Austrian school, but he's certainly very receptive to Austrian school teachings. He kind of got it, and then we set up the Hayek Distinguished Teaching Fellowship, which still exists today, actually, so I'm glad to say. So there is some kind of legacy. And then, interestingly, out of the woodwork, come these closet sort of Austrians who've been hiding under the books in various departments in the LSE, and they all say, I'm really interested in that, actually. And some of the governors as well on the governing body have also indicated that. So, in a very small way, we're trying to get a resurrection going there of Hayek and some Austrian teaching. So that was my connection, and that's when I reached out to. So that's when I became connected with you guys at the Mises Institute, because in the mid-90s, you were the only guys really out there who I could reach by the emerging World Wide Web with anything to do with the Austrian school. And it was I just happened to look up this guy, Ludwig von Mises, who Hayek used to speak used to speak quite eloquently about. And then, boom, you arrive at the Mises Institute.
Mm-hmm.
And that was the connection.
Okay, well, that's great. Yeah, it's, I mean, I think I have my history down right that Hayek was invited to give lectures at the LSE, and that was sort of like the English-speaking world's first exposure to, what we would call Austrian capital theory and business cycle theory as a response to Keynes.
Well, there's a slight episode before that because Lionel Robbins, who was an English economist at the LSE at the time, had translated Mises's Money Bank
Theory of Money and Credit.
Yeah, Theory of Money and Credit. Yeah, so he was, I think he was the first person, or he's either the first person or the second English translator of that work, and that introduced it into into the English speaking world.
Okay, so again, you founded or co-founded the Cobden Centre, and named after Richard Cobden, of course. So, for people who maybe the name means something, can you just explain who he was historically and then why you decided that was the person whose name you wanted to use for this center?
Well, Richard Cobden is associated with the Corn Law reforms, and the Corn Laws were basically it's a restrictive practice that the aristocrats of this nation, who are the prime landowners of the time, these in the 1800s, to hold prices really, really excruciatingly high, and kind of like an OPEC type arrangement, but for basic foodstuffs, so that the poor, certainly the poor, could literally like buying a loaf of bread was paying for your mortgage equivalent, is extreme. And in the rise of the start of the Industrial Revolution, this new mercantile class was rising, and it was demanding representation. It was getting more electoral presence, and Richard Cobden and then later John Bright became the catalysts really for the fight against that kind of entrenched privilege, and they managed to get the Corn Laws abolished. And that was a wonderful thing. You imagine if we could abolish the OPECs of the world and all the cartels and bad practices that are designed to benefit the producer at the expense of the consumer. So that resonates with me. And he was also, an self-made industrialist, calico printer, cotton, and up in Manchester. And he's up in Manchester because that's the really rainy part of the country, which you need a lot of water for their processes. And that was the start, of course, of the Industrial Revolution. And he was a radical, a liberal radical. So, the whipping system wasn't so formalised as it is now today. So although he's classed as a liberal, he was really a radical. And he's not really owned by any political class. No, the Tories can't say, "Oh, he's our man." The Liberals can't say, "He's our man." The Socialists can't say, "He's our man." But they all can say, "We respect, immensely what was done." The Socialists, because it's the poor were alleviated. The free marketeers like myself, because he just literally collapsed the whole entrenched privilege system for the benefit of the free market and the Industrial Revolution that happened. I suppose Tories now, who've become more liberal and free market, can sort of endorse him, but he would have been the absolute enemy because they were attacking all the aristocratic privileges. So he's not really owned by anyone. So if you're going to set up an institution, it's a bit like Mises isn't really owned by any political class or political party or faction in any significant. Well, I suppose you could say the Libertarian Party now, but not any of the major ones. So I thought that would be a nice way to name a centre. And I did that with Steve Baker. He's now a minister, actually Minister of State for Northern Ireland, which is one of the kingdoms of the United Kingdom. And he's very Misesian or Cobden-like. I see great parallels with them. And when you read Mises in his various books does touch upon Cobden occasionally.
Mm-hmm. And just in general, I mean, the again, to sort of underscore the achievement, it wasn't as if, tariff rates were 62% and Cobden got them down to 58% or something. I mean, it was a pretty sweeping overhaul, and also not because necessarily of like backroom dealings, but just like educating the public and just like making the case for free trade so powerful that it was sort of irresistible.
Absolutely. That's exactly what it was. And Robert Peel, who's the Tory leader, who was, effectively set up to defeat these moves, there's a very famous speech in the House of Commons where basically the law of comparative advantage is enunciated very eloquently, in straightforward non-economic terms, if you know what I mean. And Peel just throws his papers down and surrenders and said, "I can't defend this anymore," and switches sides. And that was really the collapse when a number of one of the Tories then came behind it, and the aristocratic parties were then defeated. Mm-hmm. So Robert Peel is viewed as a traitor to the Tory classes, to the aristocratic privileges. But it was a complete and utter wipeout, and it established free trade. It was the catalyst to establish free trade, because then there were treaties. I mean, if you look at the Cobden, I can't remember what it's called, Cobden Chevalier Treaty, I think it is, with France. It literally is one page. That's it. It's not like mountains of writing and books and, we were going to carve this little bit out for this section of the wine industry or this bit of the cheese industry. It's just, no, all barriers, finished, done. And, the track record is Britain, became the greatest power on earth at the time, because of his foresight in doing that, and spread a lot of free trade around the world. So,
right, and it's funny because you think of like an island nation that, they should really be in favor of commerce across the seas and whatever. It seems like a no-brainer in retrospect, but it did take Cobden and his allies to do that, because the protectionist and at that point protectionism was more understandable than it is like in our day and age, and yet those fallacies still persist.
Yeah, but it's all the same arguments. If you ever have time to search up their speeches in the Houses of Parliament, it's exactly the same. There's no difference between what we're arguing, and how we're arguing. So unfortunately, you have to keep reinventing it, don't you? Each time, So the tariffs that Trump has put on with China, and so often people will say to me, "But Toby, you're such a free marketeer. Why don't you support the European Union?" Well, the European Union has a lovely single market inside it, and don't get me wrong, it is wonderful, inside the single market if you're on the inside,
right?
But the barriers to entry that they then put up for outsiders means it's a great big protection racket for all the industries on the inside. So whilst yes, great, free internal market across 400 million people, whoopie do, tick the box. The reality is it's more detrimental to, my opinion, to world trade, because it then erects huge barriers. Not on tariffs, or they're very good on that front, but they're much more subtle. It's all done on our rules. X number of hundreds of thousands of pages say this, and you must exactly replicate it if you wish to trade with us on a free trade basis. So then they're non-tariff barriers that they concentrate on, which I think is a huge detriment to actually Europe itself, to Europeans, and formerly to ourselves when we were part of it.
Well, yeah, I remember like during the Brexit arguments that one of the standard ones for the anti-Brexit people was to say, "Oh, yeah, Britain might be able to or UK would be able to renegotiate with the rest of the world or whatever, but you're going to lose access to the European markets then." And it's like, well, so doesn't that prove that it's not a free trade bloc if they're going to lose access if you're out of the club? So they're kind of like proving the point that this is certainly not laissez-faire free trade, all things considered. So you mentioned a minute ago Sir Robert Peel. So people who read Mises see that name come up a lot because of the attempt to enforce sound money in banking.
Yes.
And then and the way Mises told it is they made an intellectual mistake. Like, in other words, they were on the right track when they were trying to limit the issue of bank notes that were unbacked. I'm obviously dumbing this down a little bit, Toby, but they didn't understand at the time, just intellectually, that checkbook deposits were also, economically equivalent to bank notes, like, paper that trades hand to hand. And that was the flaw. And so the act did not stop the business cycle, and it was viewed as a failure. And Mises was saying, well, it was just they kind of had this wrong, but in general, the spirit of that was correct. And you personally have had a lot to do with versions of that approach. So I don't. Do you want to talk about that a bit?
Yes. So that was the debate that was known as the currency school versus the banking school, which culminated in the currency school winning, essentially, or as you say, it's sort of partially won. Mm-hmm. And the Bank Charter Act of 1844, I think it was, Sir Robert Peel put that through, and you had to have all notes issued backed 100% by gold, silver. I think it was a bimetal standard now. Anyway, commodity money, and yeah. As Mises points out, well, the job was done. Yes, tick box. But then it's like when you, I don't know, with when you push down on a mattress, boom, you go there, and boom, up it comes over there. So then the checks took over in the place of the roll of notes. But I'd just like to wind back slightly before that.
Sure.
In Manchester. Which is, as I said, it was the start of the Industrial Revolution, or Lancashire is the county that it's associated with. So in Lancashire, they didn't have a note issue by private banks in the dawn of the Industrial Revolution. They relied on bills of exchange, and so the bills of exchange then was. Like, I suppose, do you have receivable finance? I think you do in America, accounts receivable finance, or we'd call it here invoice factoring, whereby a manufacturer, for example, would sell his inventory forward, or sell his inventory even to ex customer somewhere else down in the country, and receive payment for it instantly in specie from a local bank or bullion dealer, and then these bills would then function as money during that credit period by being assigned over to the next person, who could then use them, and ultimately it's then settled. And the Lancashire traders preferred and wanted to use bills of exchange all the time, but the Bank of England comes along around the turn of the 1800s and starts interfering. Then ultimately it legislates. It gets its parliamentary colleagues to legislate, and then gets a note privilege of issue in that area. Then starts, and then it's not an outright privilege. What they did is they made it financially so punishing to trade on bills of exchange that you were forced to change on notes. They did it by taxation. So the notes of the bills of exchange, which were 100% reserve medium, then die out. But the original Industrial Revolution was founded on bills of exchange and not notes of issue by private banks, and then private banks or the state-owned bank, the Bank of England. And then there's a whole series of boom-bust cycles where overissuing of notes, and the usual story, the credit-induced boom-bust cycles. And the currency school argue for 100% reserves, and the banking school argue that that argue actually, and in fairness to them, they argue that the what becomes the central bank should butt out of it and just let the county banks do all their note issuing, ultimately the market will control that. But anyway, Peel wins, and the Bank Charter Act is done, which gives 100% reserves on notes, and then within a decade you see another boom bust cycle because the checks then come into issue again, and because there's no fractional reserve free banking in a pure form, which might be able to be more of a control mechanism in a business cycle environment. It wasn't. So you got boom bust, and we've had it ever since. Enter Mises, who then recommends a series of actions to move to 100% reserve. Hayek endorses him. The Chicago School, including Milton Friedman, endorses various proposals based around this, as does Maurice Allais, the French Keynesian. So all schools of thought represented there. It's not a outlandish. These are wacko anarcho-capitalist libertarians.
Yeah, can I just emphasize or underscore that, Toby? That yes, I mean there was literally this thing called the Chicago Plan, and the only reason I'm emphasizing this is because in modern intra-Austrian arguments, like one of our favorite things to argue about is fractional reserve banking, there's this notion that it's Murray Rothbard and his weirdo disciples that are in favor of 100% reserves, and any other serious economist knows that modern banking's, and whether fractional reserves are good or bad or what have you, that's incorrect to castigate it is this fringe view. Because like you said, this is, it's clearly in Mises. Hayek has nice things to say about it. Even Milton Friedman, Irving Fisher.
Milton Friedman. I mean, the whole raft of even Gary Becker in modern times. And as I said, the Keynesian economists as well. And there's one guy I read during the financial crisis, Larry Kopnikoff, who desperately doesn't want to call it 100% reserve banking because for the issues that you've just. It's almost like saying, I eat babies for breakfast.
Right.
He calls it anything other than 100% reserve banking, but that's what he's recommending. And then, so Mervyn King, now Lord King, who was governor of Bank of England several governors ago, is very, very sympathetic towards it. So it's not a wacko dacko, Murray Rothbard weirdo libertarian thing. Yeah, it's very mainstream, and one should one should always remember that. I made a proposal. Of course, no one's of trying to pick some of the ideas from all of those schools to try and in the financial crisis, because the great financial crisis, I thought, right, well, that is it. We're gonna fall over. The whole monetary system is going to collapse. Of course, I was wrong, because we embarked on a process of QE, which we're now seeing the consequences of, kind of writ large. And maybe these ideas will start getting looked at again. At some point in time, I'm sure there must be a reckoning, because you just cannot keep on borrowing and minting. Creating digital, digital numbers out of nowhere, and expect the system to still all stay together. So at some point in time, we will be faced with a financial reckoning, and we'll have to look very closely at these alternative solutions.
Well, yeah, and that leads to, by the way, I don't want to be accused of misleading the opposite direction. So Hayek and Milton Friedman, they wrote a lot of stuff on monetary reform. I'm not saying Hayek was always for 100% reserves his whole career. I'm just saying at times he supported things. So it's like you say, it's not just this fringe view that only Rothbardians supported. So yeah, this leads into what I did want to ask you about in terms of right now, where things stand. So in light of your recent remarks there, I think we both agree that what central banks have been doing, since 2008 is unsustainable, to use one word among others. And just where do you think things stand? Is it like they've just keep painting themselves into an ever tighter corner, or, because for one thing, I'm surprised it lasted this long. And there's, in retrospect, I can come up with the reasons of why my timing was off. But nonetheless, even though to me it seems like how long can they keep this thing going? Maybe they can keep it going another 20 years, and I'm just too pessimistic.
Yeah, I think that, Robert, in 2008, I would have said it. That's why I wrote my banking reform proposal, which was actually inspired more by Jesus Huerta de Soto's writing than all of those others put together. And we can probably talk through some of the technical, because I could amend that today to work with cryptocurrencies.
Okay,
we might want to talk through that.
Yeah, definitely.
But to answer your question, how long? Yeah, I really have no idea. I would have said it would have collapsed by now. And that taught me one really, really valuable lesson: is never bet on the macro. I think, interestingly, John Maynard Keynes, if you read his investment history, it's wonderful actually, because he starts off quite idealistically and he does bet the macro. Yeah. And he starts doing reasonably well, and then he virtually goes bust. He then reinvents himself and he becomes phenomenally successful, forgetting about the macro and doing bottom-up stock picking of value-orientated stocks. And he ends up making a fortune for King's College, Cambridge, in the endowment fund, which they still benefit from today. And a personal net worth of an equivalent of £30 million, which is extraordinary for a Cambridge professor.
Sure.
Yeah, so he was phenomenally successful as soon as he stopped actually, in reality, doing anything to do with the macro. And I think that's what I'd advise anyone is this economic conversation that we are having, you and I. Definitely don't use it for any investment advice whatsoever, because I've no idea how it would go. And it could go on. How long can they sustain it? Well, with fiat and with command, you can theoretically sustain it forever, can't you? You'll just be impoverishing people more and more. How long will the people put up for it? I think that's the question. And do the people really understand it? So the first round of QEs was fairly harmless for the people, wasn't it? Because it went straight into the banking system to repair their balance sheets. It was never spent. It's all the COVID stuff has actually been spent, and that's why it's transitioned through to inflation. And to a certain extent, they've got to want it to happen, because they've got to depreciate the real value of that debt burden. So they can do that, and they can carry on doing that. And so long as they don't allow any alternative monies or any alternative ways of ever doing anything, then it's financial repression. And I'm more than ever on the kind of thought process that the only way out for all Western governments, because we're all in the same boat. You guys, whenever I speak to Americans, it's so terrible what we're doing, and blah 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 blah. And I kind of think, well, yeah, we're doing even more terrible, and so's a load of other places. But you can do that, and you can do financial repression if you control all the pieces of the jigsaw puzzle, which they pretty much do. So they can affect that through force. So, for example, here, pension funds are forced to buy government-dated bonds to match liabilities. So if those bonds are always going to be falling down in value, I think they've fallen 27% in value this year. Great, take it off the pensioners. No, that's what they're doing. And are the pensioners, is your grandma going to go out on the streets and go up in arms and tear down the barricades? Probably not. So unfortunately, financial repression is I think what I'm seeing going forward. Justice-wise, it should fall, but I don't think it will. I mean, something very radical has to happen for it to fall. And they can, I was reading the other day, there's a very good economist called Russell Napier here, who's a financial economist and financial historian. He has the Library of Mistakes in Edinburgh. It's an actual physical library where you can go and look up all the economic mistakes of the past, and he's wonderful. And he points out actually in the Second World War, a leading member of one of the Scottish pension funds and life companies was sent to America. This is obviously before internet and trading instantaneously and so on and so forth. And his purpose was to redeem entirely all British-owned holdings of American securities and replace them with government-issued gilts, bonds. And he did that. And that paid for the Lend-Lease, helped pay for the Lend-Lease arrangements that America and Britain had set forward for you to help us in the Second World War before you became officially involved. Mm-hmm. So financial repression, I think, is unfortunately, I think that's where it will go, Robert. I don't think we will see a reckoning moment, or I can't see it going forward unless you have very enlightened leaders who say, actually, I think it's morally wrong to play this game, and I want to change the system. And this is how we do it. We move to something. You could pick any of those plans, and there'd be a better option than we have today.
Mm-hmm. Well, I would like to go back to something you said a minute ago, because yes, I want to ask you specifically. You alluded to the proposal you had introduced, and then you're saying, and now you would be able to update that in light of some of the developments in crypto. So do you want to speak to that a bit?
Yes, thank you. Well, crypto, as you know, it's immutable, isn't it? It can't, your little line of crypto, it can't be multiplied up into other things. So in terms of its functionality, it can function very much like gold. So I was just thinking, so in the original iteration of what I wrote for the Cobden Centre, based on all those plans that we've mentioned, but particularly Jesus Huerta de Soto's plan, is that you could, in extremity, in a financial collapse situation, you could move on day one to nationalise the banking system, and then you could take the creditors who have demand deposits, IOUs, from the bank, and you could replace those you could replace those with Bitcoin or some kind of cryptocurrency that you could make. As you know, central banks could make those, and you could then put a little constitution that limits the ability of anyone to make more of those units, so you have the same effect of a Bitcoin. And that way, you've corrected the Peel Act. Now all demand deposits are 100% backed. They're bits of code, unique, indivisible bits of code. Originally, I thought it could be done with gold, and you'd have a tremendous amount of uplift in pricing in gold. But you could do it off the bat with Bitcoin. And then on the other side of the balance sheet of the banks, you'll have the huge assets. And with those assets, you could get them slowly paid down over time. All the loans, they get paid down, and they could pay off the national debt. They're big enough. The demand deposits are bigger than the national debt here. I don't know what it is in the United States of America. So over a period of, if the average maturity is about 5 or 6 years on loans, you'll manage to pay off the national debt in the same time. Then moving forward, you've then got the banks, you denationalise them, you put them back, and the currency in circulation is the crypto, which is indivisible. So it can only then the banks form the role that a lot of people think they do, which is genuine intermediaries between savers and borrowers. And if you want to loan your crypto out, you lose control over it for the period of time of the loan, and then it gets repaid to you back, presumably with principal plus interest, being a bit more crypto. And you see that's the way you could move to a full reserve system, which will have the added benefit of also being able to pay off the national debt at the same time. So you have a complete reset. and then move to full reserve banking.
Okay, well, that's very interesting. So, just make sure some of the listeners aren't getting lost in the weeds here. The basic issue is right now the way it works is, yes, banks still connect savers and borrowers. They act as credit intermediaries, as you're saying, but they also form another function or serve another function of just safekeeping and convenience. That, I don't want to walk around with $10,000 in my pocket in currency, or 10,000 pounds. And so I put it in the bank for safekeeping, and then I go around town with my card that I can just swipe or write checks on. And so those two functions can be analytically distinct, conceptually distinct. And for somebody like Rothbard or anybody in favor of 100% reserve banking, they should be. And so if you're going to lend money to the bank because you want to earn interest on it, that's a separate thing. And then you don't have access to that money. You've relinquished control. Then they go lend it out to somebody else who wants to buy a house or whatever. And then, but by merging those two things, where I go deposit money in a bank and I think I still have it there in my checking account, and then the bank lends that out to somebody else, to a borrower, that's the sense in which the bank is creating money out of thin air. And
Yes.
that's precisely the thing that you're trying to, your proposal is trying to get rid of.
Yeah, well, with crypto, it gets rid of it, period, because crypto can't be. It can only be a bailment, so it can't be a credit instrument at all. So to be clear, there, I can say Toby has 10 bits of crypto. He's going to lend to Rob for a year, but I don't see it as I don't see it in my bank account still. Yeah, I see you as a debtor now. To me, and in a year's time, I expect repayment of that. That comes back to me. Therefore, the bank doesn't have that. The bank doesn't credit you. So that's the problem, isn't it? If I have the 10, and I lend it to you in the conventional banking system, you have the 10 as well, and then we both have the claims to the same 10. Yeah, under a crypto system, that crypto has to physically go. It has to go to you. You have to have full control over it. In the digital world, you are now the owner of it until that duration of the loan expires, and that's how you could move to full reserve banking. But the benefits for the people, as other than then having an end to credit induced boom and busts, is that you have the other side of the balance sheet of the conventional bank, which is the loan side. The loan suddenly these banks will just have assets. They'll have no liabilities that you've just nationalised. So you use those assets to do something good, pay off the debt that's being created on all this silliness over a period of time, and then close those functions down. And then you're only left with banks that have a bailment function. Well, they have a safekeeping function and a bailment function. And capitalism, the birth of modern capitalism in the Industrial Revolution, and that's the reason why I mentioned it, was founded on bills of exchange, which are 100% reserved at all points in time. And there's no reason why modern capitalism couldn't exist on that basis going forward. So I think, it'd be lovely to find people who would dig in, politicians who would dig into this more, legislators who'd become more receptive to it. There are one or two in the United Kingdom, and we actually got on the statute book. I think it was in either 2012 or 2013. Douglas Carswell, who was a parliamentarian at the time, and Steve Baker, the gentleman I mentioned, who's now a minister in the current government, they did get it put on statute, the mechanism for being able to do this. So that does exist here. If we ever needed to do that, not the crypto bit, but with at the time it was suggested using something like gold or commodities.
It seems to me, I just want to get your reaction, and we're coming up here on the clock, so we got to wrap things up. But I just want to ask you, is it, because you talked before about financial repression, and yes, the government could use various ways of leaning on private sector actors to sort of help them clean up the mess the government created. But I mean, in the limit, if interest rates are spiking, I mean, they can't force the whole world to just buy their bonds. It would seem difficult to completely repress spiking interest rates. And then ultimately, currencies do collapse, like in Zimbabwe or whatever. I mean, that sort of thing happens. Is there, in your mind, is that not a realistic concern for like the larger, more advanced economies, that just an outright collapse?
I think it's highly unlikely, because they've got all these levers of control, and they are not absolutely mental.
Yeah, right. That's they know enough to stop printing and let things calm down at some point.
Yeah, and we're going through that process here right now, whereby the bond markets have been extremely shocked by the current government's plans to cap energy prices and fund it by 150 billion of bond issue. And the bond markets were briefed about this, and they thought it was okay. They then add on, we're going to lower taxes from, this shows how sensitive it is. So keep 150 billion in mind there. We're going to add on a tax cut for the rich, from 45% down. The marginal rate from 45% is going to be brought down to 40%. The impact of that is 2 billion. And that tipping point, that 2 billion, sent a run on the pound, and sent the bond, the yields on the bond spiking to nearly 6% from low twos or 3%, which is of course disastrous for homeowners and people looking to redo their mortgages, and for pension funds trying to match their liabilities. The pension funds collectively went to the Bank of England and said, we are effectively going to go bust if we have to pay all our margin calls. And this was only a few days ago, and the Bank of England, from wanting to go down a QT path, they want to do good, has now gone back to agreeing to do QE to the tune of 65 billion. But that message out to the marketplace has then calmed everything down. And in fairness, they've only done three and a bit billion of QE. And today it was only 22 million pounds. So I think just the threat of it, you see, can then bring the bond market back into discipline. But it does require the politicians. Now, the politicians today, at 7:20 this morning, then removed the 45% to 40% marginal tax suggestion. They removed it, so they won't implement it. So just that marginal thing was enough to really spook the marketplace. Despite the inflammatory bit to me is the 150 billion in the first place. So, but there is a point, yeah. And as long as they back off, then I think they can. Then yeah, why couldn't you continue on that path of financial repression? I hate to sound very doom and gloomy on the. I know we're in the closing bit, but I think we're going to see much more of that.
Okay, well, yeah, I mean, you might be right. The other thing too that's ironic about that anecdote you just told was that, in terms of borrowing money in order to fund something, cutting marginal income tax rates from 45 down to 40 seems like a pretty effective use, from a supply side perspective. Like that, in a sense, a lot of that would pay for itself. But of course, that's not how a lot of people would analyze it. Yeah,
and no, they wouldn't. But the 150 billion, though, I think is very, not only just, that's a huge amount for this economy. We're a 2.2 trillion economy, and 150 billion of borrowing already, when we've got, I don't know, our deficit is something like 200 billion this year. So it's a sizable increase in the deficit, which I think is already, that size, massive, etc. It's not actually, it's in danger actually of not like all government policies, it sounds well-meaning, but it's probably going to do the opposite of what it intends to do. So yes, it will cap the gas prices and the electricity prices here, which are in extreme distress at the moment. But when you do that, the incentive for the householders here and for industry to then say, I'll tell you what, I'm going to turn the thermostat down, and I'm going to put a few more layers on, and do some very practical things to reduce my demand, because gas is in extreme short supply here on the European continent because of what's going on in 10 years of bad energy policies, but triggered. But the trigger moment is the Ukraine Russia war. I don't think many people will adjust their habits, and we'll end up. So again, today they've now released an emergency. The gas authorities have reached an emergency order saying we will have to close down bits of industry. Can you imagine? This is the sixth largest economy in the world, and we are being told we're going to have blackouts, and we're going to have schools closing for certain parts of the week, and da-di-da-di-da. It's just terrible. So I don't think their policy will even be effective, and it will cost us 100 billion of borrowing on the never never. So it's the typical government mess up. Yeah.
Right. And then when it doesn't work, the free market will be blamed for sure. Yeah.
Absolutely. It's those nasty energy companies.
Right. So, right. And our reliance on fossil fuels and so forth. Yeah.
Yeah, that's right. And the over in the continental Europe, which we're geographically part of but not part of politically, as you know, since Brexit, what they're doing there, they're doing a price cap, and they're doing more windfall taxes on the energy companies. So you imagine if you're sitting there as CEO of EDF, one of the French big energy companies, and you're thinking, well, what's my incentive to go and invest in more supply if all I'm going to do is get it taken away by windfall taxes? They must be scratching their heads thinking, well, you know what, I'm not going to bother. So I don't know whether they're all shouting more supply, more supply, more supply. Where's it going to come from?
Yeah. Well, I've got a good one for you too then, Toby. So here, I don't think this has been formally insisted upon yet, but there was reports going around Bloomberg and whatever that Biden administration officials were meeting with large U.S. refiners and saying, hey, we're concerned here that you're shipping a lot of your gas overseas and your inventories are very low while you're earning record profits. And so we may impose a windfall tax or whatnot. And we might impose a requirement that you have to raise your inventory levels. So if you think about it, the issue is there's not enough gas getting to the pump right now for U.S. drivers. If they now just change the rule and say you have to bulk up your inventories, where's that going to come from? That means less is going to reach the pump, so it will raise prices. But they're thinking, because in the normal times, if there's big inventory, that means prices tend to be they're mixing up correlation and causation and thinking if we just force them to raise their inventory and more is now going to sit in warehouses or silos or whatever, then that means there's more for drivers, when no, it's the exact opposite. But there you go.
Yeah, I just don't know whether they almost think they can pluck it out of you can pluck it out of your top pocket. Yeah. That's it. It's done. It's extraordinary. And these things need years. I mean, years and years of investment. And then the other thing they've got to think about is, I know what's going to happen as soon as after this crisis is over, it'll all be back to wind and solar, and it'll be sod you fossil fuel guys. So why on earth would you invest anywhere? Why would you invest in a distillery which is going to take 10 years to get planning permission, build, and start paying for itself? You just wouldn't. I think that is at least as dangerous as the monetary stuff that we've been talking about. That's probably the subject of a completely different podcast, webcast. It's probably, I don't know whether you guys at Mises have covered energy, but that really needs to be addressed.
Oh yeah, we've had Alex Epstein on and some others. Yeah, Jeff and I cover that a lot. That yes, it is amazing. And as you mentioned a minute ago, I mean there was a full blown energy crisis in Europe even last summer with natural gas prices that were 600% higher. So yeah, this isn't
Putin. Yeah. I mean, Putin is a convenient scapegoat. This is a 10-year crisis in brewing. that was showing itself, as you say, 18 months ago.
Yeah. Okay, well, why don't we wrap it up on that cheery note? So, Toby, for people who want to like follow you or to see more about the Cobden Centre and things you're doing on, where should they go?
Twitter probably. Dare I say it? I love and hate the medium. I think I'm at Toby Baxendale. I think that's it. Post things occasionally from now and then. And also the Cobden Centre at the Cobden Centre. Max Rangeley posts things there. Steve Baker, the MP, is always a good one to follow as well. Although I suspect now he's a minister, he has to be much more guarded in what he says. But he's very sympathetic. I would suggest those mediums or reach out to me direct. I've got a contact note on the website, and I'm happy to deal with anybody who's got an inquiring mind and is polite.
I bet you we have at least a handful of people that fit that description following. So go ahead and give Toby a note if you want to learn more. Well, thank you, Toby, for being our guest. Fascinating as always. Folks, thank you for tuning in, and Jeff will be back in the saddle next time. So until then, we'll see you later.
Check back next week for a new episode of the Human Action Podcast. And in the meantime, you can find more content like this at Mises.org.